All right, so let's go ahead and get started. Sorry about the wait there. Ace, you should be able to hear me now. Let's go ahead and start with the overall market. Okay, we want to look at it from the big picture, so we'll start with SPY, QQQ. I'll give you the neutral strategy. We'll look at Thinkorswim. I'm using TradingView right now. So this TradingView that we're taking a look at is just for a cleaner picture. The notes are on here. We don't need to cover the notes as I'm going to kind of cover that with you. So once again, the view that I'm looking at, all right, that I'm watching is going to be this range. And this is the range really that we're trading off this entire year. So when I talk about Fibonacci's, I'm measuring from here to here. All right. So far we've pulled back on the SPY. This is a monthly chart. We're going inside. We are inside the cloud, so therefore I can expect a little bit of choppiness. But as far as my methodology is concerned, if we could stay above the 38.2, which is around 390.12, 390.15, if we can get back above that level, we are back inside of a bull channel from this pivot low into this pivot high. Okay, so very, very important level that we're going into this week. And the question is whether or not we can push over that. So let me check one thing. Make sure you guys can hear me now. Can you hear me? And before I continue here, see if I get an answer. All right. So again, with the Fibonacci, if we could break over the 0.32 around 390.12, then that can set us up for a really nice move. Now, again, this is the bigger picture, and what I want to be looking at is so far from the relief zone or the double inside and up here, we have moved as expected. This is a form of support here, but you have to understand from the initial move up or the initial inside and up to the move down, this is just a relief rally zone in this area. So we have to be careful. All right. So we can still have fun, still trade on the way up, but I want to show you shorter term levels of resistance and support. All right. So again, we'll get you all set up for that as we go into this week. All right. So this is the biggest thing on the monthly. Just pay attention to this. If we can get over this level and hold it, then things look really good. Let's go ahead and get over here to the Qs. All right, so over here on the Qs, same thing. I went ahead and measured from the pivot low here to the pivot high. We've been doing this for quite some time, matter of fact, for almost the entire year. And as you can see, the 618 or the golden Fibonacci level did hold. And as long as that level holds, that means that this range that I've measured, that the trend is still intact. Now, I'm not saying it's a bullish trend. All right, I needed to move above here at 321.79, but we are between the 618 and the 50. And what I do teach there is that anytime price is stuck between the 618 and the 50, it gets really, really choppy. All right, so your major levels for this month as of right now are again that 50 and 618. So you can see here just from a Fibonacci standpoint, you have support and you have resistance. Okay, so big picture, we came into a double inside and up. This is your demand zone. Because I'm finding this on a monthly chart, it takes a little while. All right, for things to kind of work themselves out and to see if we get that big push that we're looking for. All right, so SPY and QQQ, I just want to make sure I cover that. And then let's go ahead and jump into Thinkorswim. And this is my setup for this week. And I'm going to go over this with you really quick. All right, so this is SPY and QQQ. I have a video out there on YouTube. You can watch that video and it helps you to understand how I trade the neutral strategy. Now, the way I come with these levels or find these levels is that I'm using Fibonacci. I'm using supply and demand. I'm using Fibonacci extensions. I'm looking at the cloud. I'm looking at my proprietary scripts called Trendy Edges that identify supply and demand. I put all that together for a really nice layout going into the week. Now, the idea is that I just want to go long over the green line and short underneath the red line. Everything between there is neutral. Now, I'm not saying I won't trade this when it's in the neutral box, but just to make it easy and to save some time, this is what you need to know. Let's look over here on the left-hand side. Again, this is SPY. Notice that we have a trendy edge in the neutral. I'd really like to see this level in here around 385 to 385.36 hold. But notice on the 4-hour, we're a bit extended. A couple things that I want to show you is that the momentum has changed from red to white. Okay, and it was looking to go green here, which is a huge change. Price came down into the edges, it pushed above the cloud, and again, the momentum changed. Now, if we can continue up, what I'm seeing going into this week is that we're actually coming into a daily supply zone, all right, through the SPY and the QQQ. All right, and I'm going to show you that here in a minute. So I don't want you to get lost, but understand that we are testing supply for the third time. So the idea is if we can rev up and break that supply zone, we should be able to push to these levels that I am annotating to the upside, okay? On a pullback, what I really want to see is that the cloud is holding. Notice here on the left-hand side that the SPY cloud is basically in sync or confluent with the lower end of this neutral. So even if price were to fall back or pull back into this level, what I'm looking for is support at these levels. Okay, I'm not necessarily looking to go short right away. So for example, if we were to open up and we gap down and say we gap down around this level, I'm actually looking to go long, but I'll be using the levels, my signals, TTM squeeze to figure out whether or not I want to go long, okay, off of that level. So just staying really patient if we were to pull back into there. Now, for some reason on the SPY, we gap up and the momentum is definitely there, then I want to be really cautious if we gap into or around 387.21 and 388.64, somewhere in here. So what I would be looking at for that particular case is that I'm actually looking to get out of some of my longs if we push up into that level. And again, I'll show you that here on a daily in a few minutes, okay? So again, these are my targets to the upside. These are resistance until proven otherwise. And to the downside, these are support until proven otherwise. Right now, my overall sentiment is bullish with support at around 382.16. And if we gap up into these levels, I want to be cautious looking at trimming. I hope that makes that clear for you guys. Over on QQQ, same thing, folks. Neutral strategy, 289 by 292. These are levels to the upside that I'm looking for resistance to come in. Notice I have a fourth target up here. That's if we start to break over these and hold, then I think we can see up towards that round number of 300. Notice here as well, we went from a red to white to green momentum, okay? And because of that, again, I'm very bullish with support at or around the bottom of this cloud, around 289. If QQQ for some reason pulls back and wants to digest Friday and Thursday's move, I would expect buyers to hold these levels around 289 by 287.5. Again, I would be looking at going long in this area as long as everything lines up. Again, my signals, TTM squeeze, and that my levels are holding, okay? So that is SPY and QQQ. Let's go ahead and get into these charts here. Now, this is what I really want to show you. All right, so we're going to go over here to the weekly itself. All right, and let's pull that up. And this is your weekly chart. All right, and this is what I'm looking at on the SPY. So it's pretty straightforward. You could draw a nice little trend line in here, and you could see that we have resistance here. All right, so if you like shapes, that's what's happening here. It could be a sideways kind of week, you know, and everybody's looking for a big breakout, but we don't get it. Now, as far as the inside and down formation is concerned, I see this right here. And this is the bigger focus. So if we get through the smaller time frames that I'm going to show you here in a minute, then this is where we are headed. All right. This is where we are headed if we get through the smaller time frames. And again, I'm going to go through that with you. So what I'm teaching here is to make sure that you understand the bigger picture. Again, we're underneath a cloud. We're still underneath resistance. And so the pops, we have to be very careful because going back and looking at all this, you could see once we fell below the cloud, it hasn't been a great picture, right? Even though we've gotten above here, boom, right back down. All right. And ever since then, every time we get into the cloud, then you are looking for this to be a nice short opportunity. All right. As the cloud is resistance until proven otherwise. All right. Once again, disclaimer though, it doesn't mean that we can't trade to the upside into this weekly cloud. All right. And so for right now, the cloud itself is coming in around 391 to 392. All right. And you can see here we close at 385. So that gives us a little room to the upside as far as the weekly is concerned. All right, so this is the daily. All right, and this is what I'm looking at here. A couple things. So the TTM squeeze was starting to fire off here. We're getting a little bit of momentum change. Some things that I want to note here, though, on your daily is that we have a gap fill down here. Okay, this blue line right here is the trendy edge. This is a long-term support. All right, so as long as we're holding above here, I really like this trade to the upside. Okay, again, if we were to pull back here looking for support in this area, again, bigger picture, still in the cloud, but this was the key thing that I want to show you when it comes to supply and demand. Now notice that I'm going to draw a box around this supply. When price leaves here, we wait for it to come into support. All right, and support can be the trendy edges. We could be looking at the squeeze. You could be looking at EMAs and so forth. What I'm looking for are these lines that are on my chart. Okay, so we come into this blue line, then I'm watching down here. I want to see that sellers are getting exhausted, and then I'm willing to take the trade to the upside. Okay, now I want you to notice that once we draw this box around here, okay, and price leaves and then finds support, it then moves back up towards this inside and down. And you want to see how many times have we hit that? It's been 2 times. So what that tells me is that we're trying to chew through supply, but we haven't quite got there yet. All right, very important to understand that. So for me, this is my target, is this supply zone. And once we get there, there's a very key thing that needs to happen. All right. And in order for that to happen, if it happens, then we will continue up towards that break of a possible break of the daily cloud above 392.61. Then we could see things start to fill these gaps up here. All right. Towards 401. All right. Now, as far as the 4 hour is concerned, let's get in there. Oh, looks like our Thinkorswim actually just went down. Let's see what happened here. Let's see if we can get in here. I bet they better not be doing maintenance. You know, if that's the case, then we'll have to come back. But let's go ahead and take a look here. And by the way, while we're just sitting here, just to let everybody know, we are in long positions. We had an awesome Friday, and we'll go over that towards the end and talk about that, okay? All right, let's get this SPY back on here. And let's get over to the 4 hour. I really like the look of the 4 hour across the board, but there's some things that, again, I want to talk about. Now, I'll tell you on that neutral strategy, my go-to is I'm using a weekly and daily charts to come up with those levels. But once we get into trading, what I'm really paying attention to is the 4 hour, because the market hasn't been very trustworthy. And because of that, I'm using the same methodology, but using just a tad bit smaller time frame to stay in these trades. Now on the 4H, notice how we started to fire off here. We've gone from red to white. We have this resistance above. We have 2 different levels here where we have trendy edges, which again, remember, identify supply zones. Okay, so these are identifying previous supply zones, and you could see that, and you could see that this is resistance until proven otherwise. All right, so red to white is great. The question here going into tonight and tomorrow is whether or not you think we're extended. Now, from the cloud itself to price, this is the divergence that I'm looking at. And so because of that, that's kind of where I figure out, hey, are we overextended or not? And if you think we are, what a good trick that I like to use is go ahead and take these fibs. Let's go ahead and measure from here, and let's go ahead and see the 23 and the 38. This is where I'd expect support. Notice how they're confluent with the cloud itself. Okay, so when we're above the cloud, we expect the cloud to be support. All right, and notice again, those Fibonacci's were right in place for that. Okay, so very important to know those 2 levels there. Again, if we come into there, I would expect some support. Okay, over here on the QQQ, let's go ahead and take a look. We're going to take you into the weekly, just like I did earlier. All right, and this is what we have right here. All right, and this was last week's, by the way. If you want to take a look at it, check this out. So we'll put this on the 4 hour. I'm going to take you into 7.5, which was Great. Give me 1 second here. And 7/10/22 is the dates we were on. That was not the date. Give me 1 second here. Yeah, this was not the right date. I apologize for that. So anyways, let's go back to the default here. All right, just like that. And looking at this, you can see we have the same thing going on the 4-hour. You know, the charts are pretty much going to look the same. We're sitting right at resistance. We fired off here. We were in a squeeze. We started to push here, but we pushed right into resistance before Friday's close. So again, it's really that line in the sand, whether or not we can hold these levels. Again, you could take the Fibonacci's, you can measure from the pivot low into the pivot high, look for that 23 to 38. But for right now, I just want to see that we can hold the cloud. So that's at around 289.24 on QQQ. If you like trend lines or you like shapes, there's a couple things that I want to point out to your attention is that we're basically in a channel. Okay, and the idea here is when we are in a channel is to think about getting short into high on the curve or high on the channel and looking to get long when we are lower into the lower end of this box here. Okay, notice we have these levels that are popping up. This is where I want to be looking at getting long. And this is where, in this case, because we tested a couple times, not necessarily do I want to counter trend trade and try to go short, but I want to be releasing some of those long positions into this area. And then I want to honestly wait for this market to digest. So 3 days up would be idea. All right, so maybe a gap up into resistance, and then maybe Tuesday and Wednesday we kind of digest that move and then figure out whether or not we're going to move to the upside. Okay, you can also throw some trend lines on here if you're into that and just kind of do something like this. But again, I'm not really into shapes and so forth. We can use them at times to kind of help you. But my biggest thing is supply and demand. And you can see right here, we have inside and downs around the trendy edge. So once again, if we gap into here, just take some caution. All right, nothing wrong with that. Maybe trim some, right? Trim some, hold some, that type of trade. All right. All right, so we covered SPY and QQQ. Let's see if we can pull up this here. I want to talk about the dollar just really fast. All right, now this is the same chart that I've been using in the room for quite some time. Now I have some notes on here. It says the top and wicks could be a sign of the dollar stalling. I said the same thing last week. Update, the dollar did stall. I'm cautious in my bigger account. And currently, if you remember guys, the week previous to last week, I only had one position in the big account. Okay, then I started adding into that account and now I have 3 positions on and I'm comfortable. I will add more positions in the bigger account if the dollar begins to drop below that 103.889 level. So although I have a top and wick here, and we could go over to the 4-hour and see that that top and wick just basically means that we could see a short-term stall here. And the question is, where do we pull back to? I'd really like to see us break below 107 and then head all the way back into this yellow line and start to break down even more. And if we could do that, I think we can continue the rally here. But again, maybe a day rally with a couple days of digestion. Okay. All right, let's go from the DXY one more time. And now we're going to go into TNX, or the 10-year treasury. All right, the only thing that I want to see here, I've also been using the same chart, is this. And I haven't changed any of this. All right, this was a zone. We basically pushed through the back end of the zone. But if you commit to the candle, which we like to do, you can see that we came right back in and we're flagging here. Okay, but I'd like to see it break down below the red box and then pull back to the mean, which is at or around 2.5. And if we could pull back in there, I think we could still continue this rally, especially in tech and bigger beta names. All right, so the update looks like a possible pullback into that 2.44. Let's just call it 2.5 for right now. All right, looking at the SKEW. All right, if you don't know what the SKEW is, please look it up on Google. It could tell you what that is. But basically, your hedge funds, I use these levels here. After a long period of time, I also do not use a monthly. We use a weekly. All right. And update, the SKEW dropped significantly for 2 months and finally a sign of a risk on environment. What risk on means, hey, I'm comfortable taking some longs, but I can't just use the SKEW, and that's why I like to go over the SPY and the QQQ. For example, this worked last week. We did very well. All right, pushing to the upside, but you notice on the SPY and the Qs, we're coming into that previous supply zone. And because of that, just because it says risk on doesn't mean I'm necessarily like, hey, I'm just going to go long and ignore everything else. As a matter of fact, this market has pretty much stayed in this area for quite some time, just like it did last year. So last year was difficult for me because I was scared to put on too much money because it was saying, hey, protect yourself. And the rally itself just kept melting up and up. And so many signs were saying, hey, we're going to get a big pullback. And now in hindsight, you could see, right? It was warning us, but it wasn't as reliable as it was in the past. A lot of times what you could do is just put the SPY chart behind here. And as we approach these risk off situations, you would see that the SPY is pushing up into extreme levels of greed. So we start to protect ourselves. And then the opposite for this risk on environment is that you would see that the SPY is basically dumping into very fearful environment. All right. But we're looking for demand and so forth. So last year, we stayed up here for quite some time, which threw a lot of traders off. And anyone that tries to tell you they were not concerned about the market pulling back, I'd be very surprised. Okay. A lot of traders, we stayed up in this area and things were just off. Right now, this year, we're staying down here and you keep thinking to yourself, well, we're in a risk on environment. Maybe we start to push up here. Right. Maybe things start to look good, but the moves are very, very short, right, to the upside. So you have to be really careful, right? If you get too bullish, you could get stomped the next day. And if you're not bullish enough and you're too fearful, you find yourself just kind of a deer in the headlights. So you have to have something that's between the two, right? You have to have some sort of process, which is what I like to teach, all right? So if we come over here, let's pull up the this chart one more time. I'm going to go to the ES futures. Okay. And this is going to kind of describe to you how I'm looking at this market. Okay. So this is my go-to. If anybody doesn't know that, this has been my baby for many, many years. And this, with everything I just showed you, I'm really in tune with the ES futures and I understand how to read this chart. I can use SPY with this. I can use SPX, but the bigger picture, I went ahead and annotated some stuff on here so that you understand. So far on the weekly, I showed you this on the SPY, is that we have support at the trendy edges. We're pointing at the blue and these purple lines here, and those are support. Notice that the cloud is also resistance, and we have supply zone up here at around 4069 by 4221. Okay, so this is the bigger picture. Now let's go ahead and focus on our next picture, which is going to be the daily. Okay. All right, so we have a lot going on here, but let's go ahead and read it because this stuff is really, really important. This is what is going to help me stay on the right side of trading next week or this coming week. So we have the supply zone. I went ahead and marked that for you. I wanted to also note that we have tested this 2 times. Notice that the trendy edge was here. Now, just so everybody understands, my indicators are there before price, which is really nice. I don't need to look for these structures because we find them by using the trendy edges, which find a playing field of supply and demand. Okay, so I know that when I look at this, it's been tested 2 times. And if we start to break through there, then again, we could break through the cloud and so forth. But notice here, we also have cloud resistance, we have supply, we have what I call double stacked resistance. We have all these edges that are on top of price. So we want to be careful as we approach those levels. Or if we gap up, I am personally going to be trimming into those levels. Now, the next thing is to notice that the trendy edge support on a higher time frame is right here. And I want you to note how well it came right into this level and then went bid, showing you just how amazing these edges and supply and demand can work for you. Down here, I wanted to note that this was the squeeze I noticed several days ago. I went ahead and made note of that. And as long as we were holding the trendy edge, I was looking for this thing to fire soon. Okay. Once again, I do believe we need to get through this level. Okay. All right. So that is the daily. Now let's go into the 4-hour. Okay. And again, this is what that looks like. And over here, and we just went over that. The biggest thing here is we are firing off here, possible slingshot move. We're above the cloud. The question is, are we extended going into this week? All right, but maybe not quite extended where we should be, which could be up here towards the trendy edges. Okay. So tonight, when the futures open, I'm not interested in trading them tonight. I have a couple things going on. But what I will tell you, again, is if for some reason the futures gap up into one of these levels, which let's go ahead and go over those, 3882 by 3902, and then possibly 3911, any of those levels, just be cautious, okay? It's not until we start to build value over the next pivot high. If you don't know what a pivot high is, please look them up. I'm going to show you really quick. You can see here, this is a pivot high, okay, right here. So these are lower highs, lower highs, lower high. What I want to see is that we can create a new pivot high. The first one's going to be right here, right where we stalled, okay? We need to build value above there. And the best one, in my opinion, again, is if we get over this level. So the trendy edge there, we break over. I'm going to be really excited for the move that could come, that could set us up for, once again, that 4,000 to 4,100 level. This is the same level I've been talking about for several weeks now, and things look pretty good. All right. So tonight, if for some reason we gap down, I'm looking for value or bids to come in around 38.35 by 38.18. Okay. So that's what I'm looking at there on ES Futures. Now, the next thing that I want to talk about is the fear and greed. So you can pull up the fear and greed on Google. All right. And it's showing right now from a 0 to 100, we're at 27. So last week we were at 30 and now we're at 27, which means the market is even more fearful than it was then. So they're not necessarily buying the bounce, if you know what I mean, like mentally, you know, they're not quite there. People are fearful still. So that is telling me that the majority of participants are actually still either on the sidelines, they don't believe it, and they may as well say, hey, I'm more into the put side than I am the long side. Now we're talking about the majority of participants, okay? So what does that tell you? Well, for me, looking at everything that I'm looking at, it's telling me that we still have room to go to neutral or to greedy. All right. So in that case, it brings me back to the daily, right? So if we can break through, and again, this is an inside and up formation, by the way. All right. And again, we have, I have a video out there. It's about 3 minutes or so that teaches you about that. What I'm looking at is building value off of this inside and up. Now the inside and down is right here, sorry. All right, and we've already traveled there. So the idea here is maybe we can get some continuation into this zone, hold this level, digest for a bit, maybe come down a little bit, flag, and then a possible break. And so we finally would get out of this channel. Now, again, folks, that is the bull side of things. All right. Try not to be too biased. It's a if this, then that situation. And honestly, in this case, I really feel that can play out as long as this blue line holds. That is the most important part for me. Okay. All right. Thanks, Ace. I appreciate you letting me know that. Sitting there talking to myself for a few seconds, and I apologize for anybody that had to sit there and watch me lip sync this thing, right? So on the broad market, let me make sure I went over everything I wanted to talk about. Fear and greed, the SKEW, TNX, the dollar, the Q, the SPY. The next thing is we have a huge earnings week, folks. Now, me personally, I use Earning Whispers on Twitter. This kind of gives me an idea, you know, what's coming up, and you can see it right here. All right, you can see all this stuff that's coming up. This is a lot. All right. So this is going to be a really fun week. All right. I can't wait. So if it's bullish, which a lot of people are not, you know, forecasting that, that earnings are going to be great, but you never know. I like to, really rely on supply and demand and not look too much into the news ever. So again, concentrate on these levels, and I think those are going to help you out quite a bit. Now, as far as market watch, let's take a look at that just so you guys can see this. Okay. So market watch, it's pretty quiet this week. Look at Monday, right? Really quiet week. Check out Tuesday. Not a whole lot. I mean, the housing market might get hit. We'll take a look. I'll be interested in that. Existing home sales on Wednesday. So our concentration could be in here for a possible short setup. But, opening up, we have some really good positions on right now. So that would be my biggest concern. And Thursday, this is probably the biggest day. So this makes sense to me, okay? So let me just type this out so everybody understands. For me, my methodology, gap up, gap into resistance. Okay, I don't know if you guys can read that. I apologize if you can't. Gap into resistance. This would be, for me, this would be digest that move that we've just watched over and over. Okay, and then digest here. And basically, just like if you were watching me last week, I was talking about how we were for the playing field. We're getting ready for the playing field, and boy, was I right. I mean, we literally called it to the tick, and I'll show you that here in a few minutes. But the gap into resistance, okay, I'm looking at trimming my longs, okay, let the market digest. When I say digest, sideways to down, okay, and then looking to come into some demand, and we get ready for the playing field for the initial jobless claims. Okay, now it could be completely off, but that is what I'm looking for going into this week. Okay, all right. So moving on down, I have a featured chart, and the reason why I say featured is because I wanted to go over. You can apply this to any stock. All right, this happens to be gold. All right, so I'm going to pull gold up. I don't like trading gold, but when I do, I think we've done pretty well in the past. But I try to stay away from it. All right. Now, anytime that I see a chart that's breaking major levels or that is pulling back like big time, like we've seen in many, many names out there in the stock market, I'm going to tell you this right now. My go-to is the quarterly. Okay. You got to go to the quarterly, folks. If you're trying to trade this on anything smaller, you're going to get whipped. All right. And you better have a process. All right. So when I say this, I say it with a process in mind. Supply and demand, looking at Fibonacci's, looking at all that stuff. The one thing that I'm noticing here on the trendy edges, these are my higher time frame edges that I trade like leaps and long-term trades off of, is if these aren't holding, I want to stay clear, okay, of a long until it comes into an area of demand or we start to reclaim above that major area. That's the first thing. If you're into shapes, you can take a look at this and think, hey, maybe this is like a big cup and handle, maybe. All right. Coming over here to the monthly. All right. Let me go back to the quarterly. We're inside the cloud. Anytime we're in the cloud, expect choppiness. All right. Over here on the monthly, this is important. We have a double inside and up. Boom. I found my level that I'm interested in. Okay. Very interested in this level for gold if it could get down here and then reclaim this box. So that's around 149, 150. All right. So when I do that, and then I look at the weekly, notice how extended we are off of the cloud here. So again, divergence, right? I always want to be paying attention to current price and where the cloud is. And if it's bigger, like if you were to take a measuring stick and look at this, and you would say, hey, this is, let's just say this is 2 inches. How many times in the past has gold fallen 2 inches from this cloud? Okay, not very often, folks. I mean, right here, this is definitely pretty extended, but notice how it pops up. It gets very close to the cloud every time it comes back down. But far as like a big, deep drop, it hasn't happened in quite some time. Here's one at 16, though. That was pretty ugly. So what I can tell myself is this. This is not as common So this area in here, there is a good chance that we reclaim it before we head back down into this green box, okay? But if we start taking out these lows over here, I think it's time to go short into these levels here, all right? That's just me, and that's what I'm sticking to. All right. So I may be looking for a short in gold if it cannot reclaim my major areas. The timing is the variable. It could be this week, could be next week, but this is just something that I'm watching. Okay. Now on the monthly chart, we could see that the inside and up, as I said, is here. All right. And if I were to draw some Fibonacci's, I could take a look at, let's see here. We have this one right here. If I were to draw Fibonacci's here, you could see that the inside and up on my chart is right around these levels. So 143, right at the 50 and the 618. Okay, 50 and the 618. All right, so these inside and ups, what I'm saying, are confluent with your Fibonacci levels. All right, folks, so you can see the banners are extremely bearish as well. Let's really quick go over this one more time. The trendy scripts or the trendy edges identify supply and demand. All right, our members know that. So any level to the upside that's above price is supply. Any level to the downside is demand. I have a certain way that I trade supply and demand. I've been trading it for a long time, and I have a technique that I like to use that really helps me out. I don't necessarily like trading blindly, meaning traditional ways to identify zones, go long at the zone, and then, you know, a lot of times you get stopped out. Because it'll flush a zone and then it will go in the direction you want. So you have to be careful. For me, I've incorporated the TTM squeeze in my zone trading, and it has helped immensely. I mean, it's a free script that I use right off of Thinkorswim, and I think it's amazing as far as timing goes. All right, I want to show you what I presented over at Simpler Trading, and this is really breaks it down. All right. So let's go to the 4-hour really quick. All right. And on the ES futures, on this guy right here, this is as basic as you can get. All right. And lucky me, I got to be live trading during that time. So I really love being able to show the proof of concept. And I want to show you really quick how I took this trade and how it worked out so well. Now, when I say I took this trade, we alerted the spies, and those went from $2 to 12, folks. 2 to 12 over a 2-day period. That's pretty impressive. All right. But what's more impressive is like how the zone itself worked. All right. So just using the basics here of an inside and up formation, which was right here. And I want to talk you through this. See, when price left here, it didn't quite make it back. Okay. Didn't quite make it back. It pushed up into supply or a trendy edge. Didn't quite make it back, hit a trendy edge and popped. Didn't quite make it back, and then guess what? I got to go live right here and demonstrate why patience is so important. On that day, we were coming off of a previous day down, and what I was looking for was this zone right here. And once price came into this zone, my main focus was right down here on the squeeze on a smaller time frame. All right, I don't want to go back into the 5-minute because I have to look back too far, but I want to explain it to you. So then we get into the zone, okay, and then I'm going to a smaller time frame, and what I'm looking for are these yellow bars. This is letting me know that sellers are getting exhausted, and I start to notice the yellow bars. I like the higher lows. I get into the trade, and this is exactly what you want to see. Not only did our level work very well, we basically just kept riding, and then you're able to see that price breaks over the cloud. We start to momentum change from red to white, and so forth. Okay? So this is the way that I really like to approach these zones. It helps out quite a bit. Zones are great because we're able to identify our risk and our reward in many cases. Now, I'll tell you something. Again, this is turning into a little bit longer than just a broad market analysis, but hopefully some of this stuff can help you guys. Make sure you have a journal. Okay, seriously, like write stuff down. If I'm teaching you and I'm taking the time to teach you, I really hope that you appreciate that. All right, because what I'm trying to do is take all the years of my study and break it down and make it as easy as I can for you. Okay, trading is not easy, but honestly, a process can be easy once you really, perfect it. And you're always, as a trader, you're always going to change just little tidbits of it. The difference between my process and a lot is I don't change the edges. They never move. They're there for me. They're always there for me. I don't change the bands. I don't change my methodology on what is bullish versus what is neutral. So the trendy methodology has always been the same. Okay. It has not changed. And that's what I love. And the cool thing is I can go back and I can test this from the inception of the market. So I don't care what name we look at. I could take you back to when the market opened. I could show you the value of using the methodology and how it can help. And that's what I want to do, guys, when I'm teaching you this stuff, okay? Now, the psychology of trading, that's the hard part. And that's where I say, just open up YouTube, watch Mark Douglas, watch. Everybody's heard of like trading in the zone. I like it. It's cool. But my biggest like go-to for Mark Douglas, he has a series, it's 1 through 4. And it's like, it's like back in the 80s or something. He's like chilling in a classroom environment. Everybody looks like, I don't know, it just looks like it's way back in time. But the most value for me came from those. If you can really adhere to and listen to what he is saying, you'll pick up on a lot of different things, and it will just get you so excited and get you ready for the market and get you ready to apply your process. And if you can stick with that kind of mindset, man, you can go far, right? You can go far. And then when you don't go far, you can at least understand maybe what you did. All right. So always be making notes and so forth. All right. So to sum up things, I just want to make this, summarize. My overall sentiment is bullish. All right. And it has been for the last couple weeks. It's always a if this, then that. All right. And we try to give you the best levels we can so that we can be on the right side of the trade. But I'm also giving you the bigger picture. And the bigger picture right now is telling me just be cautious, because the overall market hasn't really given us like this bull run that we can just keep on keeping on, right? So you have to be aware of where those levels to the upside are. And you want to be careful as we approach those levels. I love trimming. I understand where targets are. I understand where prices can reject, and I understand where they could support. So in order to be a really good trader, especially in the options trading and equity, you really need to understand where you want to go long and where you want to be thinking about going short or trimming as you're going long. Okay? So put those two things together, throw in some Fibonacci, throw in some trendy methodology, throw in some TTM squeeze, you could find yourself better than where you were yesterday. So if you have the time, come by and check out trendytrading.co. We have like a trial for $5 for 7 days. You get to listen to me live. I get to show you my charts. We have actionable charts like I was showing you guys earlier. So it looks a lot like this right here, this buy in the QQQ. And so like going into this week, we will identify those levels that I gave you a little bit earlier, but also it's a trading plan. We have the levels, we have everything we want before we get started. And I think that's what's so important about an education service or just a service in general. On top of that, I still to this day am the only service that I'm aware of that has alerts that come straight from my brokerage account to the room itself within milliseconds. That does not include future trades because the API is in a different place and location. But as far as my options, my equity, all that stuff, it comes straight from the brokerage to my members. And the reason why I do that is for proof of concept. I want you guys to know that what I say I'm doing, I'm actually doing. And you could go back and look at that stuff. Okay? So I appreciate you. Overall, like I said, I give you guys all the charts here. They're in the room. We'll be trading those charts. I'll be putting the schedule out there so you guys know when I'm presenting. over at Simpler as well. And if you guys have any questions, please reach out. I really appreciate you. I hope you have a great weekend. We will see